John, in every adverse set of circumstances, there's always a silver lining.
There's the possibility of opportunity.
Yeah. I guess that's closer to being realistic.
Yeah, no, that's right.
Yeah. Maybe not always a silver lining, but what we're going to talk about today is absolutely a silver lining in what we've had as otherwise a pretty negative set of circumstances. And that's since February 19th, the market's dropped, as of today, around 32%.
Right.
Not fun for anyone, unless you were shorting the market.
Right. Yeah.
Even then,
if you had your,
you're probably wondering what your next move is.
Yeah. Well, if right before all of this, you had somehow predicted a 30% drop in the market this week, I would also like to visit with you about lottery numbers.
Well, let me just say that there will be people who will come out after this who will say they predicted it.
Of course there will.
There always is.
There always is.
Yep.
Although they won't show you where they specifically invested all of their money on that prediction.
Certainly not. Absolutely not.
But by God, they knew it was coming.
They were the ones who predicted such and such. You see those people come out of the woodwork all the time.
Oh, yeah. No, that's certainly right.
So the particular silver lining in this set of negative circumstances is even maybe compounded a little bit with some recent legislation changes.
Right. Yeah, we got a couple of things that have all happened in the last couple of years and some just in the last couple of months, right? Right now, we have tax brackets that are historically low, generally speaking. Mm-hmm. One of the things that came in with President Trump was a lowering of tax brackets. Top tax bracket right now, I think, is 37%, which, I mean, you go back through time and, you can get all the way back into the 1940s and 50s where the top tax bracket was up in the 90s.
Yeah, crazy.
Yeah. So, we historically low, not the lowest it's ever been, but historically low. So we've got that. We also have the Secure Act, mm-hmm. which came in effect January 1, 2020, and basically took away the lifetime stretch on inherited IRAs if they're inherited by anybody other than a spouse or a disabled child or a minor child.
Right.
But generally, if you inherit mom's IRA or dad's IRA, your availability of the lifetime stretch is gone. Mm-hmm. You're going to pay tax over 10 years now, maximum. And so we got low tax brackets. We got this crappy Secure Act that makes you pay all of taxes, in a short period of time on inherited IRAs. And we've got this market collapse.
Yeah. Yeah, I think it's safe to call it that at this point. I resist using words like crash.
If I had $1 million on January 1, I got 700,000 right now.
Right.
Maybe a little less.
Yeah.
Depending on which minute of the day you look at.
That feels awfully like a collapse to me, right?
Yeah, I mean, losing $300,000, that's a bite. That's a chunk if you had $1 million.
Yeah. Right.
So you might be thinking it's all doom and gloom, but we are not doom and gloom.
Absolutely not. Glass is always half full.
Yeah. So interesting with all of this, right? You have a kind of a potentially a unique opportunity, and that's the Roth conversion.
Absolutely.
And I like some Roth conversions. I think they're neat, and the different Roth conversion strategies that are out there. But you start looking at all of these different factors. Let's just go based on the tax, right? Just straight tax. If you can get money out of your IRA, which will be taxable to you as you pull it out, and also taxable to your beneficiaries, and you're in a historically low tax rate right now. If you can pay tax on some of that IRA money by getting it into a Roth where it continues to grow tax-free, but when you pull it out, you won't pay taxes on it. And then in a year, 10 years, whatever it is, we have a change of administration or we have an economic necessity that requires raising tax rates. Hey, you paid on it when they were low.
Yeah, right.
That's good stuff. right? Plus, the more you can get into the Roth, the less tax impact that's going to have on your beneficiaries when you die.
Certainly.
Because paying tax over that short period of time, that's going to hurt them from a tax standpoint. It's often going to cause them to jump tax brackets, things like that.
And that's the 10-year stretch you're talking about now,
and I'm talking about
right?
the 10 years now, right? So if you can pay taxes on them now, and then, with the Roth conversion, then when they inherit a Roth, that's coming to them tax-free. So good there. So with the Secure Act and with the historically low tax brackets, Roth conversions are already a good idea.
Yeah, I'm starting to have a lot of requests to do analysis on that.
Right. They're already a good idea, period. Yeah. I've been kind of talking about this now since the first of the year. Because the Secure Act has changed from a estate planning standpoint, what are we doing with these IRAs and how are they going to pass to trusts and things like that? It's already been a big deal. And one of those things is consider Roth conversions. But let's just look at it from this standpoint. January 1st, the passage of the Secure Act, and you got that $1 million in your IRA. If you'd have done a Roth conversion of the entire amount on January 1st, because you thought, man, Secure Act, boo.
Right.
I'm going to convert the whole $1 million IRA. You'd have paid about $340,000 in taxes.
Ouch.
Right? And it's still a lot of money, right?
Sure. Yeah. Right.
But here's my point. Devin, is the market going to go back?
Oh, absolutely. Yep. No question.
You don't know when necessarily.
Nope, I don't. Have no idea.
But you are completely confident.
100% confident
that the market is going to go back up.
Absolutely.
But as we're recording this today, down about 30%.
Yeah.
So if I didn't do my Roth conversion on January 1, like I thought I might, but instead I've just been holding on to that $1 million in that IRA. Well, it's not $1 million in that IRA, is it?
Nope,
it's not. $700,000.
Yeah.
If I were to do the Roth conversion right now on the $700,000, the tax bill would be about $250,000. Yeah. That's $100,000 of tax savings. And now all of the market recovery is going to come in the form of tax-free growth because it's still in the Roth.
Absolutely.
And tax-free withdrawals.
Yeah.
That's big.
That's big. That's real big. I think it could be the opportunity that we have in front of us today. I remember in 2008 and 2009, I can't remember which year it was, there was a piece of legislation that passed that said that, hey, if you want to do Roth conversions, we'll even split your the tax bill from that conversion out over 2 years.
Right.
Now, they haven't talked about doing that this time that I know of, but heck, everything's changing on a daily basis. We may hear that come out at some point, and if it does, that's going to be even more of a reason to consider this. But even without that, we're not saying convert the whole thing in 1 year.
No.
We're not saying
right.
that. It's going to be highly dependent on your own individual set of circumstances. But this is a great time to consider doing a conversion.
Yeah, no, the most important thing with Roth conversions is bracket management, right? It's trying to take as much as you can in that conversion to walk you right up to the next bracket. So it's bracket management. That's why you don't do the whole $1 million at once.
Right.
I was just using that
Certainly.
because I can do the math in my head, right? But what you don't want to do is get so focused on the fact that, yes, this is a down market, and I'm going to try to figure out where the bottom of the market is, and then that's when I'm going to do my conversion.
Right.
Because that's timing the market.
Oh, yeah.
Don't time the market.
And we're back, whether you're timing the market to invest or timing the market to convert, both of those, you're probably going to guess it wrong.
Right. So yes, the fact that it's a down market presents a unique opportunity because you can do more conversion within your bracket in a down market than you can or than you could have at the first of the year.
Absolutely.
Right? So you can get a bigger conversion within your bracket right now.
Yep.
So, but yeah, don't get so focused on, oh well, the pandemic is going to get worse in 2 days, so I'm going to do it at 2:00 on Friday.
Right.
Get with your accountant, get with your financial advisor, look at your brackets, look at your portfolio, and it's down right now. It's going to be down for a little while. If it makes sense, convert.
Absolutely.
Some, all, based on you.
This could be the opportunity that you may not have for another, who knows how long, 10, 15 years, and maybe not even then. I don't know. But for it to have gotten down this far, this fast, I think would be fools not to take advantage of that.